What's up, everyone? My name's Robbie. This is Robbie in Manila, and today we're talking about the best healthcare sector ETFs. This is my first video I'm doing in a series about the best sector ETFs. Now, if you're not familiar with the different sectors, there's 11 different sectors in the stock market. So I'm going to be going over every single sector and trying to find the best ETF in each of those sectors, starting today with healthcare. Now, really quick, you might be asking yourself, why would someone even care to know this? Like, why would you care to invest in just the healthcare sector or the financial sector or the information technology sector? Why would you care? Now, there are a lot of different reasons. Some people invest tactically, meaning that they try to figure out which of these sectors or which industries will be outperforming in a certain year or a certain time period, and they'll go overweight in some of those different sectors or industries. So if we take a look at this graphic, you can actually visually see the different sectors of the S&P 500 index. And today, of course, we're talking about healthcare, and you'll see here that healthcare as a sector underperformed the S&P 500 index in 2020. The S&P 500 returning 18.4% and the healthcare sector returning 13.5%. So if you, for example, had invested in all of the different sectors, but you underweighted healthcare, that might have been a good thing. If you overweighted healthcare, that might have been a bad thing. You'll see these other sectors did better, like materials and information technology. So if you had overweighted those, then you would have actually done better. So I hope that sheds a little light on why you might want to understand which sector ETF is going to be the best, because now we're going to go through 5 different sector ETFs and try to figure out which one is the best for the healthcare sector. So let's go ahead and let's get started. All right, let's go ahead and get started. Now, first things first, I made a new intro. I hope you liked it. It just played. I made it a lot shorter. It's only 15 seconds long. I wanted to really make it a lot shorter than the other one I had. So hopefully you liked it, but please let me know in the comments if you like this intro, if you prefer it. And if you don't, let me know, because then I'm going to probably need to redo it. So thanks a lot for leaving a comment about that. Okay, so like I said, we're going to go over 5 different sector ETFs, try to figure out what is the best sector ETF. First, let's go over which ones we're going to be talking about today. So first we have the Healthcare Select Sector Spider Fund, which is ticker XLV. Then we have Fidelity MSCI Healthcare Index ETF, ticker FHLC. We have the Vanguard Healthcare Index Fund ETF shares, which is VHT. We have the Invesco S&P 500 Equal Weight Healthcare ETF, which is RYH. And then we have the iShares US Healthcare ETF, which is IYH. So the first thing I'm going to do is I'm going to go through a comparison of all of these different ETFs. So let's go ahead and jump in here. All right, so here is a comparison of the 5 different sector ETFs that we're going to be talking about today. The first thing I always like to look at is what is the weighting scheme of this ETF. So a market cap weighted ETF is going to have more of a percentage of stocks that are larger, because large stocks based on their market cap. So very large companies, for example, if it was a huge conglomerate, like, for example, Apple, one of the largest stocks in the world, it's going to be a much larger piece of the portfolio than a stock that's maybe like only $1 billion stock, so a very small company. And so that's a market-weighted ETF. An equal-weighted ETF would mean all of the companies are going to share about the same weight. I hope that makes sense. So what we have here is we have mostly market cap weighted and one equal. I like to throw in an equal just to see like the difference, but most of the time it doesn't end up being better because it's more expensive, but we're going to take a look at it anyway. Now, speaking of expenses, let's talk about the expense ratio. So this actually is probably the most important part, not even just the weighting scheme. So how much do these cost? So the net expense ratio of XLV, 0.12%, FHLC, 0.084%, VHT, 0.10%, RYH, 0.40%, and IYH 0.41%. So the first thing I like to do here is say, okay, let's take a look first. I want to try to see if the cheaper ETFs are going to be better, or that's what I'm going to focus on here. So I would rather not have these more expensive ETFs as the ones I end up picking unless they can justify the expense. If they can, then that's great, but they have to be able to justify it. So first we're going to say, well, can we get these 3? Will these 3 kind of be better than the other two. Let's start with that. So let's go look at the yields real quick. So the yield here, the distribution yield of XLV is 1.35, FHLC is 1.21, VHT is 1.2, RYH is 0.44, and IYH is 0.97. So the first thing I'm seeing is, okay, well, RYH and IYH have lower yields, which means that I would expect them to have much higher returns, or at least higher returns, than the other three that were cheaper, right? So that's what I'm going to focus on here. So far in the yield, they're not like helping out here. So they're probably going to get a strike on that. We also want to see that the XLV has the highest yield, but FHLC and VHT have decent yields too, so they're not very different. Next, we want to take a look at fundamentals. Now, when I look here, so first we have price to earnings. So are any of them like really different? Or is there a glaring difference here? There's really not, especially on these first three that we mentioned. They're all in the 26 area. Price to book, also very similar. And if you kind of go down this whole thing, they're all kind of similar. There's nothing glaringly different about these that I'm seeing so far. So let's go down to the Morningstar ratings, and here you'll see the overall rating of these funds. So XLV 4-star, FHLC 4-star, VHT 4-star, RYH 4-star, and IYH 4-star. Moving on to the 5-year, XLV also has a 3, FHLC has a 4, VHT has a 4. So what I'm going to say here is first, FHLC and VHT are looking pretty good. Moving on to performance, first off, remember that I'm focusing again on these here. And why am I focusing on these? Because so far these have not really shown any like great signs to me. So I don't know if they're going to do better on a returns perspective. So if I look here at the 5-year, we have a 16% return, of 17%, a 17%, a 17%, a 17%. So they're all very similar on a 5-year return basis. On the 3-year return basis, 16, 17, 17, 18, 17. On a 1-year return basis, 31, 32, 33, 33, 33. So they're all very similar when it comes to returns at this point. I'm not seeing any huge differences and discrepancies in returns. I'm not seeing one beating it by like 5 percentage points in each of those columns. So what I'm going to go with is I'm going to say that FHLC and VHT right now are my top 2 choices so far. But I'm going to go now and take a look at the portfolio to see how that looks. Now, off the bat, the first thing I see is how many holdings these different ETFs have. So XLV only has 66 holdings. It's a more concentrated portfolio, along with RYH and IYH. They're more concentrated portfolios than the FHLC and VHT, which have in the 400. So those are very big portfolios of holdings. Now for me, when it comes to the weightings of these different companies, so first off, you have XLV with 43.42%, and it is the largest weighting of giant cap companies. So it's got the largest amount or percentage of its portfolio inside really big companies. But for me right now, I'm okay having kind of just like a nice blend of all of the different asset classes essentially. And what I'm seeing here is FHLC and VHT being actually really good for both of those. They have a decent amount of giant, large, medium, and even a bit of small in there. So what do I think? Well, right now, of course, I'm going with FHLC or VHT. So what is the ultimate decision? These funds are so similar. They have such similar returns. They're market cap weighted. They're very similar ETFs. So what am I going to base it on? Well, I'm just going to go with the least expensive of those two because I love them both. So that's the way I'm going to choose this one. So FHLC is the winner in my opinion. Now what I'm going to do next is just show you quickly what FHLC did compared to the S&P 500. And then we're going to do some technical analysis on the chart. So here you see FHLC versus VOO, which is the Vanguard S&P 500 ETF. So this is the S&P 500 essentially. So how did these two do versus each other? So VOO here is the blue line and FHLC is the orange line, and this is a 1-year time period. So if we go and we take a look, we see FHLC has underperformed the S&P 500. And over 5 years, it has underperformed. Now, there are going to be time periods where this outperforms the S&P 500 and when it doesn't. So for example, over here, you see this outperformed the S&P 500 in certain time periods, like up to January of 2018, and then continuing until about April of 2019, it was outperforming it. Let's take a look at the technical analysis really quick. Here I have FHLC, a time interval of 1 day, and this is what I'm seeing right now. FHLC was in an uptrend channel. As of about late September of 2021, it broke down through the uptrend channel, and it went down to this support area of around $62. It was bouncing off of that and then coming back down again to retest that $62 area, then bouncing back up, actually, interestingly, up into this uptrend channel, this bottom part of the channel. So I don't see a lot of positive short-term signals right now for this ETF. If we had looked at this back in late September, I would have said that this was a pretty good looking company because the RSI was really, really low. It was in the oversold territory. And then you saw MACD starting to come closer up until it turned over the signal line here. So what do I think now? Well, some good things are the moving averages here, the 50-day, 100, and 200-day moving averages. This is trading above. That could act as support potentially. So what I would do if I was trying to time an entry point into this and I was going to hold it for the long term, I would say, well, let's see if this thing goes back into this uptrend channel. Maybe it does, and maybe it stays within that. Maybe that's a buy. I would watch RSI to see if it comes back down, MACD to see if it comes back up, and then I would take a look and see if this thing does come back down and try to retest this support area. Does it bounce off support? If it did, that would be a great place probably to buy around, let's say, 63 off of a bounce with some volume. So that's all I have for this video. Again, FHLC, the Fidelity MSCI Healthcare Index ETF is my choice for the best healthcare sector ETF. Please watch more of these sector ETF videos. They're coming out soon. This is the first one. I'll be making them over the next couple of weeks. So keep watching, tune in. Thanks so much for watching this video. And please, if you liked it, watch another one of my videos. There's one coming up on the end screen. Please click it right now.